Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, I'm going to be walking you through the portfolio that my wife and I have built investing in the stock market for the past several years, currently sitting at about $470,000 in market value, of which about 10% of it is still sitting in cash available in our tax-free savings account and registered retirement savings plan available for us to deploy at any point, and the remaining 90% is already bought into three major index funds. I'll be providing a deep dive of this portfolio, our recent buys, and some of our recent sells, and I'd be happy to hear your thoughts and perspectives on it as well. All right, first things first, as you can see here from the screen, I'm sharing with you the portfolio balance that I have for my own personal investment accounts in Wealthsimple Trade. This consists of my non-registered accounts, my retirement registered savings plan, RRSP, and tax-free savings account. You do notice that for my RRSP account, the entire holding value currently is sitting in US dollars. And that's because today I ended up selling the 500 shares of X equity that I had in my portfolio in RRSP in there and converted the funds into US dollars and pretty much added to my existing shares of VT and VTI. The entire holding that I have in my RRSP account currently is in US dollars. The main reason for such a decision is to ensure that I'm avoiding the withholding taxes. And the way for me to do that is by ensuring that I'm holding on almost to the USD equivalent of the index funds that I would love to hold. And by doing so, I'll be avoiding to pay the 15% withholding tax on any of the dividends accrued from those US or international firms that do pay their dividends. In this case, as you do notice from the screen, the two holdings in my registered retirement savings plan are VT and VTI. VT is Vanguard International Equity Total World ETF. It's an index fund which is quite low cost. It only has a management expense ratio MER of 0.07%, quite minimal. And we currently have 200 shares of it. I did add around 80 shares of VT to my holdings today. I also added to my existing shares of VTI this morning. I bought, I believe, closer to 5 or 4 shares of VTI. Currently, I have a total of 50 plus shares of VTI, which is Vanguard Total Stock Market ETF. With VTI, we are getting exposure to the entire US stock market. VTI has even a lower management expense ratio, MER, of only 0.03. Yes, you can't beat that. It's just amazingly low fee there. We still have around $1,000 US dollars available for us to trade. You do notice that I don't have any Canadian dollars here because I converted the entire Canadian dollars that I had into US dollars. Now, let us move now to our non-registered account, which is the largest account currently that I have here, sitting at close to $166,000 in total value. If I show you here, the all-time return for this account is at 13% gain. The only holding here is X equity, which is iShares Core Equity ETF portfolio. X equity, for those of you who may not be familiar, is an all-in-one ETF. It's very low cost at only 0.20%. Definitely a higher fee than VT or VTI, but the beauty of X equity, which is available in Canadian dollars, is that it's considered an all-in-one ETF, essentially providing us a diversified approach investing in the stock market. Through X equity, we get around 45% or so exposure to US stock market, around that 25 to 30% exposure to Canadian market, around 25% or so exposure to international markets, and the remaining 5% or so exposure to emerging markets. Pretty easy way to invest diversified in the stock market by just picking in this one single holding and not really having to worry about selecting different holdings here and there over all the time. I have 6,140 shares, as you see, of X equity in my non-registered account. I also have close to 1,900 shares of that in my tax-free savings account. I used to have 500 shares of X equity in my registered retirement savings plan, but as I did mention today, I managed to sell them and instead use that funds to buy shares of V equity instead. Just quickly showing you here the recent transactions that I talked to you about. Some of the recent buys. I bought some shares of X equity today in my tax-free savings account. I used, as I did indicated, 4 shares of VTI and also bought close to 80 shares of VT. I had the funds converted from Canadian dollars to US dollars, and I did sell here, as you notice, my shares of X equity to kind of use that funds and convert it back to US dollars. One thing I did notice is that and you might be familiar, through Wealthsimple, if you have your account as a premium account because of the size of your portfolio, which currently is applicable to me. Even as a premium client, you're still having to pay that 1.5% exchange fee, the conversion fee that Wealthsimple charges. That's one way for them to make money. For my case, after I converted around $13,400 of Canadian dollars into US dollars, after the equivalency, the 1.5% conversion fee was equivalent to close to 148 US dollars that I had ended up kind of paying in exchange fee. It may sound quite outrageous, and I get it. Yeah, unfortunately, through Wealthsimple, we can't take advantage of the Norbert Gambit to try to have that conversion of the Canadian dollars to US dollars at a very, very low cost. But when I did the math for on my side, I did count the fact that, with switching to VT and VTI, I'm already saving on the lower MER of, let's say, 0.03, 0.07 compared to 0.20. So that's one way of saving over longer period of time. The other way of saving some funds is through saving on the withholding taxes. So the portion of the equity dividends that are not from Canadian companies, those will be subject to withholding taxes if I hold X equity in my RRSP account. Now, by switching it to the VT or VTI, I'm going to be staying away from those withholding taxes. I don't have to worry about it. There was some good feedback, though, when I posted the rationale for my switch. KYT and Zachary and a few others jumped in and provided very, very good insight. A few key takeaways from those comments on Blossom for me was that, when I'm doing the math, I have to make sure I take into account the decision later on down the road if I want to switch and sell my shares and withdraw my funds. At that time, again, I have to pay for that kind of conversion fee, so to speak. And the other aspect of it would be, essentially the consideration of not the entire dividends is subject to withholding tax. Only the portion that is from non-Canadian companies are subject to withholding tax. So great feedback. Thanks, KYT and Zachary, for those inputs. I would like to do a little bit more of a deeper analysis and looking into numbers more closely, just to make sure what would be that break-even point. At one point, I thought it's within 5 years, it would be the break-even point for me to kind of make up the cost of the exchange conversion fee that I paid, but it might take me longer than that. So you might be asking, okay, Mo, so you did just show us your portfolio in Wealthsimple, but that is not that close to 470. There is still some more investment that you should have elsewhere. You're absolutely right. And that's why I'm showing you the balance that I have in our Smith Manoeuvre portfolio. That's the account that my wife and I have. We currently are showing a total balance of $107,965. It's mainly invested in X equity. And as you can see, we currently have 4,030 shares of X equity. It's currently up by just a fraction of a percentage point at 0.15%. That shows the total balance of account. The remaining cash in this account is only $1.79. We have some more equity built in our kind of readvanceable mortgage account that we have with Scotiabank. Currently, the STEP program, around 3,000 or 4,000 or so, but I'm just waiting for a little bit of while just to market to cool off and cool down before I kind of reborrow it and bring it into my investment account to invest. It's sitting there nonetheless, and it's ready for us to deploy at any point that we would like. I haven't shown you the portfolio that my wife has. She has close to that $60,000 or so investment, all of which is in X equity. It's a combination of her investment in tax-free savings account and her RRSP account. Lastly, before I wrap up the video, I want to quickly show you the dashboard that I've developed on Google Looker Studio. And I've shared this link transparently on my YouTube description videos that you can always check out. It shows you the latest and greatest of our entire portfolio size, what holdings we have, how is performing, what's our overall return, how much dividend income we expect to get from this portfolio, what's our geographical exposure by different market sectors, USA, international, Canada, emerging markets, what are the management expense ratio associated with these funds, and so on and so forth. So be sure to check it out. Currently, as you can see, the best performing holding for us is VTI at plus 6.5% return. Following that, we have VT at 1.7%, and X equity across our entire holdings are currently up by 0.3%. The expected dividend income from these holdings are also shown here. Despite the fact that we actually sold 500 shares of our X equity today in my account, we still have over 14,000 shares of X equity, and it is our main holding. We are still believing in that it's going to be one of the best holdings for investors that don't have the time to pick and choose stocks and want to have a diversified approach to investing in the stock market. I know we have several followers and friends on Blossom that are also investing on X equity heavily. My friend KYT is definitely one of those. I know Dan is also following similar approach. There were other folks and friends on Blossom as well who tagged me and recently mentioned that they are also investing in X equity. I know Kazim is doing that, and a few others, I believe, if I'm not mistaken, are doing the same. I would love to hear from you. Are you investing in X equity as one of your main holdings? If you do let me know definitely in the comment section, or share your feedback on Blossom. I really hope you found this video beneficial and you gained something of value from it. But more importantly, I hope you were inspired by my portfolio and see how easy it is to, in fact, get started investing in the stock market. Whether you're a new big investor or beginner, you don't have to really make things complicated. You can easily get started by investing in low cost, high quality, diversified, broad market index funds, such as the ones I showed to you here. But there are similar alternatives out there in the stock market that you can learn more by doing your research, as well as by learning from some of the more seasoned investors on Blossom. If you are not already on Blossom app, be sure to download the app from the App Store and give me a follow on Blossom. Thank you, and I hope to see you all next time.